Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. All right, today Mena and I have what I think is a really good episode to share with you. I enjoy the discussions around taxation, of course. I mean, it sounds silly to say because it's a necessary evil and it's something that we all have to sort of navigate. So there's great value in doing that. But I really love to focus on what are the value add things that we can do as holistic advisors for people that are in business. And so today what we wanted to talk about is really the three pillars of business. And the way to really look at this is to, really reflect on what makes a great business, I guess. So you can apply it to your own business, but when looking at business opportunities, if you're ever approached by someone to make an investment either in a new startup or an existing business, these three pillars of business is something that Mena and I will think about very carefully. And if you run the ruler over many businesses and many industries, you can kind of see why, or you can trace back to these three pillars of why some businesses don't work as well and the downsides to those particular businesses. Okay, Mena, let's talk about pillar number one. And these are in no particular order, by the way. We would regard all three as equally critical. But pillar number one, profit margin, which is really, how much profit are you making per widget that you sell? Let's start there.
And to be honest, that's probably a strong foundation to start with because I feel like it flows through to all the other two pillars. And the first question to ask yourself is, are your margins sustainable? Is your margin large enough to compensate you for not only the risks of running your business, but also for all your overheads? Now, generally, different businesses have different sort of profit margin guidelines. I know in service-based industries will be different to, for example, a manufacturing-based industry. So you can't use always the same percentage as a sort of benchmark across different industries. So the margin must cover not only your time and risk, but it must cover all your operating costs and operational risks and personal sacrifices of ownership. Now, I think this often gets overlooked because if you're spending countless hours in your business to produce a profit or maintain a profit in your business, then you need to be adequately rewarded for that. You need to put a time value to the hours that you put into your business because it's not necessarily reflected on the profit and loss statement to make sure that you're rewarded for that.
I mean, it's a really great thing to think about, Mena. It was reported in the Financial Review that Mecca is an Australian-based cosmetic retailer. It released it had to lodge its 23 accounts, which showed that it turned over $1.2 billion in that 23 financial year. And the profit margin, from memory, was around about like 2.5%. And I was thinking to myself, wow, what a great business. But, if you're taking all that risk, several thousands of employees, etc., to make 2.5%, I'd argue you're not being covered or rewarded for that risk. Now, I haven't seen the accounts. There could be some things in there that aren't fully representing the underlying profitability of that business. So it's too early to judge, but just on those numbers, I think it's really good to think about sustainability of margins. Also, sustainability of margins will really determine whether you've got the capacity to reinvest in your business, whether it's technology, whether it's improving your product or service, whether it's attracting and retaining great talent. It's a really important thing to think about because all businesses require some sort of reinvestment. Now, sometimes that doesn't cost you in terms of hard dollars. Sometimes it's sweat equity that you're putting in, but there's always going to be some sort of dollars that need to be reinvested into a business, and having a sustainable margin will allow you to do that.
The other component that improves your profit margins is around scalability. So as your business scales, how can you reduce the cost of manufacturing to deliver that particular product or service without actually sacrificing any quality? Now, I think this is the make or break for a lot of businesses when it comes to ramping up operations and whether they're going to take their business to the next level is around these economies of scale. How do you automate? How do you improve efficiencies within your business so that you can reduce costs over time? Because there's no point in you adding or increasing your volume in the business, just adding more risk for the same profit margin, in my view. You need to be more rewarded further for the additional risk and additional costs you incur, because your business might be growing at one rate, but if you're maintaining that the same sort of profit margin and being rewarded the same, and all of a sudden the business changes, then all of a sudden you're left with all these additional expenses with no additional profit to show for it. So it's really important that you get on top of it and think about what improvements that you can make within your business to improve your overall margins.
100%, Mena. A great business is scalable, and that scalability has to go through to incremental profitability as well. As you said, no point growing the business if you're not making more and more money with each individual sale. The next thing to think about is the business a price maker or a price taker? And we've discussed this before in this podcast. And there's some pros and cons with both, right? So you might think being a price maker is you're in the best position because you're kind of in the hot seat and you can sort of steer the bus in whatever direction you want to go. But sometimes being a price taker can be okay as well. I mean, if you're in an industry where the price is set by government, for instance, and that price is very generous. I was reading in the paper, I don't know how true this is, reading the paper that under NDIS, dog walkers are paid $95 an hour, Mena.
Oh, wow.
So, being a price taker in that regard is a great outcome. But of course, there's always two sides to every coin. So we know some clients that have government as their main source of revenue. They tend to be price takers, and sometimes they could be industries where profit margins are really high. But the other side to that coin is, of course, the government could make a change, not always logical or foreseeable change, and that could adversely impact their business. So I think on the whole, being a price maker is better than being a price taker. But that really depends on whether you are able to position your product or service in order to achieve a higher margin, Mena.
And that's where I think your unique selling proposition comes in, or your USP. And this sort of comes around how you can sort of develop a brand or a value proposition or a niche that allows you to charge a premium for what you provide. And I think, I know we've used this example in the past, is around Apple. Apple have a product or a service, or a combination of both actually, that has a standout offering from any of its competitors. Think about how your MacBook, your iPhone, your iPads and all that integrate together into a platform that you don't need to worry about when you get a new device, how it's actually going to work. It's basically almost created somewhat of a cult.
Yes,
call it.
yeah.
So that's why they're able to charge a higher margin than their competitors and maintain a strong market share. So it's really important to see or assess in your business how you can get that edge up.
Profit might not be the sole reason for run a business, but it's a necessary consequence to run a sustainable business. So profit margins, things we need to ask about profit margins, are they large enough? Are they large enough to compensate us for the risk that we're taking? Are they large enough to allow us to reinvest in a business? Are they scalable? So as we grow the business, can we see that we can also grow or at least maintain, if not grow, the profit margin? And can we price ourselves to a level that's not going to impact the demand, or at least not have a great impact on demand for our level of service? So you want to have some pricing power there as well. And these all come back to a great business. So that's the first pillar, is profit margins. The next pillar to think about is distribution, which is really about getting your product to the right people, to your target market clients. And so that's the first thing. And we've got a great product that's got a great profit margin. How are we going to distribute it? How are we going to get out there into the market? So, Mena, I'm going to talk about some of the things that we need to think about with respect to distribution. The first one is customer acquisition cost. So how much does it cost to acquire a new customer? And every business should have a really good insight into what that looks like. Now, some really high growth businesses, particularly listed growth businesses, they will have a very high customer acquisition cost, and it's all just about growth, whether it's website visitors, users, paid users, unpaid users, whatever it might mean. Now that's good if you're in the market and you've got a listed entity and you've got a very buoyant market sentiment, and which it's true at the moment, but for most small businesses it really comes back to dollars and cents. So if it's going to cost you a lot of money to acquire a new client, that's not necessarily going to be profitable. Of course, you want to be able to reduce your customer acquisition costs, and you can probably do that by using different means of acquiring new customers, not only just advertising or something that's really going to cost hard dollars, but it's something you're going to really need to think about. There's no point having a fantastic product and having a very profitable product if no one's aware of it and no one's buying it.
Next step is to target the right audience, I think, which leads into what Stuart was mentioning. And it's really important to identify your target customers and how you can increase the chances of acquiring high value, high profitable customers. And this isn't an area where I think sometimes it's really important to engage professionals in. You might be really good at what you do in your business and the product that you create and so forth, but you might not be good at getting it out there, targeting the right segment or creating a strategy on marketing efforts to get the customers that you need. And sometimes, unfortunately, with these things, you got to spend before you reap the benefits. I know firsthand with a lot of these, you need to put a lot of money into sort of the SEO or the advertising or engaging the marketing company to get the product out there before you get any sort of traction. So it's really important to spend the money on it, to engage the right professionals so you can target the right audience and get some volume through your business.
And one other way to look at that is the lifetime value of a customer. Now, that lifetime value, the lifetime in terms of the period of time they're a customer, could be different, right? You could have a customer for 6 months or 6 years. But what is the lifetime value of that customer compared to the cost of acquisition? And that really then helps you target the audience to the more profitable segment, because it's great to generate sales, but what you want to do is generate profitable sales, and that's really important. Seth Godin talks about having the smallest viable audience, so really building a product that's really going to resonate with profitable segment of the audience, but making sure that segment is large enough to build a sustainable business. And one of his lines is, as soon as you want everyone, well, you want no one. So if you're going to try and appeal to a mass market, that's going to be really challenging. Which comes to my next point, which is in terms of distribution, who are you competing against? If I'm going to start a supermarket business in Australia, my distribution is going to be opening bricks and mortar stores, because I have to compete with Coles and Woolies and IGA and the independent businesses out there. That's a very costly approach to competition. Similar within banking, over the last 30 years, Bank of Scotland through Bankwest, tried to build a brand in Australia, but it was just going to be too costly. At that time, they had to open branches really all around Australia to have that competition. Of course, that's now, branches are disappearing, it's all going online, so that barrier to entry is probably reducing a little bit. But if you really need to think about the distribution strategy of the business and relative to its competitors, and you don't want to be in a situation where you're competing with players that have much deeper pockets than you, that have better distribution strategies, more entrenched distribution, that's just a recipe for disaster.
So the third component is around demand. Selling something that people want, a demand-driven business. So the first step is identifying real market problems. What are you creating, or what do you have that is solving a known problem to the general public? It's vital that your product or service addresses a real acknowledged problem that people across the board can relate to and resonate with. Your customers don't necessarily know that they have that problem, but once you introduce that solution to them, they know that they have that problem. So of course there's a risk with this, in the sense that selling something to a customer base that they don't necessarily need at that point in time, or know that they need, might be hard to overcome that hurdle. So it's really important to discuss how to use that product. So it's really important to get customer feedback once the product is out there, to understand what you can do or how you can adapt that product or service to solve a genuine pain point.
This is a really important point, Mena, because there's two aspects to it. Does it solve a problem? Firstly, because some products are just really superfluous, which, some people have built businesses selling just rubbish, but, it's not really a really strong business. So does it solve a problem? And then the second element to that, what Mena was talking about, is that you don't want to have to educate people about the problem. It's got to be a known problem, because you could be saving the world. You could come up with a vitamin supplement, for example, but if, that vitamin supplement isn't solving a symptom that I have, you've got to educate me around why this particular vitamin is vital, but yet it doesn't really change my life. It's going to be a difficult or very costly exercise. Whereas if you think about financial advice, for example, it's a known problem that not everyone wants financial advice, but there's a bunch of people that do. And they know that I've got to make financial decisions, and I don't have the experience or knowledge to do it myself, so I need financial advice. So in our business, we don't need to educate people. We really are only open or want to attract people that already know they need financial advice and really want help. Our business isn't, in terms of marketing or whatever, isn't to attract people and convince them that they need financial advice. So it's really understanding, whether that underlying demand is already there for that product or service. The next thing to think about is the industry dynamics. So is there already evidence that there's strong demand for that particular product or service that your business offers, or the business that you're looking at offers? Or are you trying to create a new product or service category? So does your industry or product or service not exist yet within a business? Now, both have their pros and cons, but typically if you're going with an evidence-based approach, if I go back to financial advice, the industry is about sort of 30-ish years old. It's very easy to measure the underlying demand for financial advice in Australia, and it's growing and it's strong and it's sustainable and it's steady. And so that gives me some satisfaction that, there is that existing demand out there. It's really about making sure that we present a business and a solution that's attractive to the market. But a new product category can be just as inviting. So if I think back to when I started Pro Solution back in 2002, mortgage brokers, at least in Victoria, the industry started in WA. In Australia, it started in WA. But back in 2002, most people didn't know what a mortgage broker did. And so when we started the business, that was the first line of conversation. But you could see that mortgage broking had succeeded in other jurisdictions, particularly in the US. It had already sort of taken off in Western Australia, and you can see the value proposition. So sometimes going into a market that doesn't necessarily have that demand yet, but there was, as I said, that underlying demand because it was solving a problem at the time.
It's really easy also to look at what existing trends are, what's popular in the market, what's working for certain businesses, because it's definitely easier to roll a ball downhill than uphill. So look at industries that currently have a lot of momentum and natural momentum that will sort of see through for a strong period of time. So look at, for example, the health and wellness sector. I think what Whoop is doing as an example in terms of analysing, providing those additional benefits to users who want to understand, how not only their health and fitness is going, but what are their stress levels and how it impedes, things such as sleep and recovery and the like. Another example will be the motor vehicle industry as an example. Obviously, electric vehicles are getting a lot more popular these days, and it's likely to be the way that the future is heading. So how can you benefit, or what can you do in that industry that will benefit the EV industry in its entirety?
So I think selling things that people want, that last pillar, a demand-driven business, I think probably the most common mistakes that people make is they convince themselves they're solving a problem, but no one else is convinced that it's a problem. Because most industries or most people out there have already solved the problems. So you either then join an industry that already has strong demand, like the EV market, for instance. Now, there can be unicorns where you create a brand new category. That's entirely possible. If you think about the mortgage broking example that I gave you, I was just in the right time and at the right place. It wasn't really by design. I'm identified that it was a growing industry, an emerging industry. So that can happen too. But I think it's really related to, if I think about people come up with business ideas or a particular business strategy or product, sometimes I'll look at that and go, well, is anyone really going to buy that? Is that really an issue? It might be important to them, but how many other people is it important to? And I think that's where people sort of fall away. So just to summarize then, we need to have, strong and sustainable profit margins. Profit margins per unit that we're selling is a critical element with respect to understanding a business. The second pillar is then distribution. Can I cost effectively grow the customer base? Can I sell more products? And lastly, am I going to have to do a lot of marketing to create a brand, which is very expensive and you'll probably go out of business before you're able to achieve it? Do I have to spend a lot of money on educating the public why they have this particular problem and my product or service is a solution to that problem? Or am I entering in a space where there's already growing and insatiable demand for a problem that people already have? So they're the three pillars of business, and we think that they're a really great lens to look at not only your existing business, but other businesses, particularly if you're invited to invest or you're even considering growing a business yourself. Okay, that's it for us for this week. Until next week, bye for now.